What if owning a slice of the next SpaceX or Stripe was possible before they ever hit Wall Street? Christine Healey carved her path through the opaque corridors of private markets, first at Credit Suisse and Jefferies, then as portfolio manager at Destiny and senior director at Forge, before launching Healey Pre-IPO, a boutique white glove broker service based in Austin, Texas. With nearly a decade of experience and over $600 million in pre-IPO transactions closed, she thrives at the intersection of trust, precision, and elite deal-making. Her mission? To demystify a market that rewards connection and punishes apathy. Christine connects accredited investors from high net worth individuals to early tech employees with founders and funds offering private stock opportunities in late-stage unicorns like SpaceX, OpenAI, and Stripe. This isn't a legal lecture or a sales pitch. It's an invitation to peer behind the velvet rope, a conversation about how access is built, what it costs, and what it means to bet on tomorrow's giants today. Christine doesn't just source deals. She guides her clients through the humanity behind capital. And before we hop into the podcast, a quick word from our sponsor, Deep Wealth and the Deep Wealth Mastery Program. We have William, a graduate of Deep Wealth Mastery, and he says, I didn't have the time for Deep Wealth Mastery, but I made the time and I'm glad I did. What I learned goes far beyond any other executive program or coach I've ever experienced. Or how about Bruce? Bruce says, before Deep Wealth Mastery, the challenge I had with most business programs, coaches, or books was that they were one-dimensional. Through Deep Wealth Mastery, I'm part of a richer community of other successful business owners. The ideas shared forever changed the trajectory of the business, and best of all, the experience was fun. And we'll round things out with Stacy. Stacy said, I wish I had access to the Deep Wealth Mastery before my liquidity event, as it would have been extremely helpful. Deep Wealth Mastery exceeded my expectations in terms of content and quality. And you know what, my Deep Wealth Nation, why they're saying this is because Deep Wealth Mastery, it's the only system based on a 9-figure deal. That was my deal. And as you know, I said no to a 7-figure offer, and I created a system that we now call Deep Wealth Mastery that helped myself and my business partners welcome from a different buyer, a different offer, a 9-figure exit. So if you're interested in growing your profits, preparing for a future liquidity event, if that's 2 years away or 20 years away, and you want to optimize your post-exit life, Deep Wealth Mastery is for you. Please email success@deepwealth.com. Again, that's success, SUCCESS, at deepwealth.com. We'll send you all the information about Deep Wealth Mastery, otherwise known as Scale for Ultimate Sale. That's where you want to be. You want to be with other successful business owners, entrepreneurs, and founders just like you who are looking to create market disruptions, and they want to lock in their financial freedom and have success and fulfillment. That's the 90-day Deep Wealth Mastery Program. It has your name on it. All you need to do is take the next step. Send an email to success@deepwealth.com. Deep Wealth Nation, welcome to another episode of the Deep Wealth Podcast. For all you post-exit entrepreneurs out there, and even you founders, you're throwing off some terrific profits and you're asking, what's next for my investment? How can I earn some profits while I'm sleeping and take my financial portfolio to the next level? Do I have a guest for you? We have a very special guest in the house of Deep Wealth. You heard it all in the official introduction. Christine, welcome to the Deep Wealth Podcast. An absolute pleasure to have you with us. You're doing something really interesting out there, but before we even get there, there is always a story behind the story. So Christine, what is your story? What got you from where you were to where you are today?
Thanks so much for having me. In terms of my story, I started off down the straight and narrow in investment banking, thinking that was the shortcut to success. Just put in the long hours at the bank and there's your career. I didn't love it the way I wanted to, and I was looking for something more entrepreneurial. So I went to a early-ish startup around Series A, and the startup I joined happened to be building a stock market for private companies. And that idea blew my mind. At the time, these were companies like Airbnb, Pinterest, Lyft, Uber, that are now in the public markets, but at the time were these huge, iconic private companies. And they were saying, why shouldn't people be able to invest in Airbnb? And so I almost stumbled upon it when I was looking for a cool startup to join, and just fell in love with the industry, fell in love with the clients and the deals I was working on. And you know what? I've been doing this ever since. That was 2018. And now I'm still very specialized in this area ever since.
Okay, wow, there's a lot there to unpack. For someone in Deep Wealth Nation who has just been so busy, Christine, running their company, they're not necessarily familiar with some of the lingo and what's going
Sure.
on. So when you're talking about a Series A, someone may be saying, okay, Series A, what the heck is a Series A? So what would that mean? And in terms of you being that matchmaker, I mean, you're throwing around some terrific names out there. How does that all fit in? So what would you say to someone in Deep Wealth Nation who is just starting to come to the position of, hey, I have some extra dollars. Maybe I want to invest that, but I just don't want to go to my typical stock or ETF. I want to go to something that a bit of a longer play perhaps, but when it goes, it can really go. And by the way, Deep Wealth Nation, this is not investment advice. It's simply Christine and myself having some conversations, sharing our opinions, and you can listen in on that. But Christine, for someone who's going to be new to this, what does Series A mean, and how exactly are you playing a role in something that sounds really exciting?
Absolutely. So the world we're looking at here is private tech companies. These are startups focused in the tech space, anything from AI to space to financial technology. And these business models often require a lot of funding from venture capitalists. So think something like Shark Tank, but maybe on an even larger scale when you're building technology. So Series A, Series B, Series C, et cetera, basically just refers to the funding round where they take money from venture capitalists. So Series A being one of the earlier funding rounds you can do. And then when you get further along in the alphabet, you're talking about much more mature and companies gradually. So you can even have Series K, et cetera, funding rounds when it comes to these really large companies that think something like SpaceX or Stripe, where they might still be raising even at a relatively late stage in their company cycle. So I'm a private tech specialist. And what that means is looking at the stock and investing in stocks of companies that haven't yet hit the public market. So you can't just go buy them on your normal Robinhood app or your Fidelity app. You have to follow this bespoke process. So, like you said, a lot of people are in these professional careers or they're entrepreneurs and they're so busy doing what they do, often with a lot of success. And it's consuming. They may have some cash built up, be doing well for themselves, but they don't have the time or the awareness of, okay, where do I take it from here? I've built up some wealth. How do I try and build a portfolio around this? Or what are the different areas I can invest in rather than just having all my money, all my time tied up in my day-to-day business that I'm working on. So that's a really common profile.
And Christine, for someone who's going to be looking at this, let's look at you, for example. You're at Credit Suisse and Jefferies, two big names when it comes to investment banks. It's not as easy as it sounds because listeners are saying, oh, okay, yeah, I've heard of some of these companies, particularly OpenAI. Maybe I'll just call them up and ask them if I can write them a check and see what goes on with that. So behind the scenes, what's really going on in terms of the research, the contacts, even the ability to write a check because it's likely not going to happen or very difficult at best. So what's going on behind the scenes that you would want someone to know of? What's up against them if I want to be an investor in some of these early startups?
What's really going on behind the scenes is that these large tech companies are grasping onto as much control as possible. They are, in many cases, going after these huge moonshot goals like colonizing Mars in the case of SpaceX, or building AI that's going to change our world in the case of OpenAI and others. And these companies are extremely picky, extremely restrictive in terms of who can actually access their shares. So, if, like you said, someone just emails one of these top companies and says, can I invest? You probably won't even get a reply. It's just not something that's going to be available to you. These companies in general do not want individual investors to partake in their funding rounds and to have their stock unless you're a billionaire in your own right. And then you might have special access and know the right folks and get your ticket in. So for the most part, it's just not realistic to directly get that access to the funding rounds if you're a regular person trying to put in $100,000, not trying to put in $100 million. And so you have to look to alternative routes. So really commonly, we can look at secondary trades, meaning we won't get into the funding round, but maybe we can find an employee of that company that has stock that needs cash for one reason or another. Maybe they're starting their own next business venture. Or we can look to a venture capital fund that got into one of those rounds, but now they want to cash out some, and a number of other sources. And we can actually match investors to these private sellers when in many cases the companies themselves might not be interested in facilitating that trade.
So behind the scenes, you're involved in these communities. You're almost like the Sherlock Holmes out there, if you will, of finding people who have stock, early stock. It's not even public yet that they may want to get some liquidity themselves. But I'm wondering because when you look at some of these names, these aren't just any names. They're some of the titans of business: SpaceX, Stripe, OpenAI, Anthropic, many others along the way. So what does it even take, Christine, for you to post a logo on your board and say, okay, if you're interested in this company, let me know. Let me see how I might be able to help you, because there must be some kind of threshold. There's many more companies out there. You're likely saying no more than you're saying yes. Let me take this company and make it available to my clientele. So what's going on behind the scenes with that?
So I have to stay very disciplined in my business and look at a short list of companies where I know I can serve my clients best, whether they're buyers or sellers. So in practice, that means staying focused on transactions in the top 20 or so companies that are most active, most sought after, and ultimately where there's more of a marketplace on buy side and sell side. So what's interesting in this market is that the more of a buyer base I build up, the better I can serve those sellers. But equally, the more sellers I build up in my network, the more access I have for the buyers. And so it's really been compounding over time throughout my various experiences since 2018, where I've built this robust network of buyers and sellers, and it just compounds because of the synergies and the network effects of building up both sides of the market. So we're talking SpaceX, OpenAI, Stripe, Scale AI, Anthropic, Anduril, Revolut, just a relatively long list of companies that fit that profile of large pre-IPO tech giant. And that's where I like to focus my time on being the Sherlock Holmes of private stock and trying to find the right counterparties or the right mix of sources to fit what each investor or each seller is looking for in the market.
And Deep Wealth Nation, to put this in perspective, you're out there, you want to invest. Well, in likelihood, you're probably never even heard of some of these startups that have just got going. And by the time you hear about them, it's already too late. They're already going public, or maybe they are public. And yes, there's a financial opportunity for potentially some profits to be made at that point. If you do it right, though, and you can get in before these companies go public, there's a larger opportunity for some financial gain. So, Christine, talk to us about this, because the whole pre-IPO market that you're focusing on, very narrowly focused. And if you have the right connections and you're able to get in the door, and you have that appetite for risk, because this is not something that is going to be like your typical, maybe I'll go to the S&P 500 ETF and just set it and forget it. There's a lot more risk going on with this. There is a big opportunity, a big upside here, as well as a big downside. But on the upside, why don't you share with Deep Wealth Nation what's in store for them should they decide to go this route that they're not going to get with your typical stock that's already out there, or buying an ETF, or your other typical financial advice? What's going on here that makes this different than what they may already have access to?
So what individual investors are up against today is this relatively new phenomenon that these high-tech companies are delaying their IPOs longer than ever. You had Reddit recently go public at, I think, 19 years old, which is unheard of in terms of when companies would go public in the past. And you have companies today that are reaching hundreds of billions of dollars in valuation, hundreds of billions of dollars, still entirely on the private market. So for example, you have SpaceX, which recently got to 400 billion in valuation. You had OpenAI just recently reach 500 billion in valuation. And these are crazy numbers we're talking about. So in today's world, the fact that a company could be $500 billion in valuation and still not be available to the public market is really wild when you think about it. So if a company is not available to the public market, what that means day to day is people are seeing, wow, OpenAI just came out with this great product. ChatGPT just had this new feature, or SpaceX just had this amazing new milestone. But you're watching these developments as a bystander. because you can't just go on your Fidelity app and go buy SpaceX shares. It doesn't work like that because these companies are not public yet. So it's a really frustrating dynamic where often really well-to-do, successful people are sitting there saying, I want a piece of this company that I see as being the future of humanity or changing the world. I'm frustrated with just being a bystander. Why can't I have a financial stake in this company? It feels really unfair in a sense to a lot of really aware, savvy investors that would be a great fit were it not for this access issue. So part of why this job is so interesting is because in a world where companies can get to $500 billion on the private market, in many cases, a lot of a company's growth has already happened by the time everyday public investors get a chance at that company after the IPO on their brokerage account. So there's a real access issue and an inequality there where people say, why should it just be the venture capitalists or the billionaires that get to access these companies before the IPO? And especially in recent times where the IPOs themselves have been really hit or miss, it's very hard if you're investing just on the day of the IPO or any time after that. Who's to say how much growth is left in that company if they've already had so much of their growth privately? And you might be really subject to the swings of the public market at that point because you got in so late, essentially. So a lot of investors are saying, what if I actually got in before the IPO, maybe even 1 or 2 years or funding rounds before they actually list? What would that look like in terms of my cost basis going into the IPO? If I get in at the right price, maybe I'll have a bit more of a buffer. There's a bit more room still left in the company's growth from here. So I'm not just subject to that post-IPO volatility.
And with more risk, you have more reward, as the saying goes. And that said, and I get the sense that things are changing. Up until recently, though, going public, never before have we seen companies hold off for so long. And part of it was really from the political side, and not to get into politics, it just seemed as though there were a negative sentiment from different government departments about going public and antitrust and all of that. That's changed since we've had a regime change, and I imagine things are opening up now. So, quote unquote, normal times, whatever normal times mean, from a company raising Series A, B, C, D, etc., to going public, how long does that typically take? Where did it go to, and where do you see it going to now?
In the past, it wouldn't be strange for a company that's maybe 5 or 6 or 7 years old to go public. Today, there's numerous examples of companies that are 10, 12, 15 years, even more, that are still being private or maybe intending to still stay private for a lot longer. So, for example, with SpaceX, Elon hasn't really shown any signs that he even wants to go public anytime soon. And so it's possible that SpaceX won't be a public company until humans have colonized Mars and much, much further down that journey. What a wild thought proposition. So it's very different. And because you have these big companies and you have these iconic founders like Elon Musk that are questioning the default mode of, okay, what does success look like? Success looks like an IPO exit. Well, does it have to? Elon says maybe no. So you see different routes being modeled. Like, what if I stay private and I keep building privately, even though I'm this huge company by this point? And people are challenging that status quo and the necessity of going public, because when you're public, suddenly you're dealing with maybe quarterly disclosures, you're dealing with the volatility day to day of your stock, and you just have a number of other pressures other than building your business and achieving your goals. So people are really questioning that reality and saying, what's in it for me? Will I be better served as a company to keep building privately? And the risk reward or the ROI of going public maybe isn't as much today as it has seemed in the past.
So from an investor standpoint, and you can correct me if I'm on base or off base, Christine, really what I'm hearing is, yes, there can be a tremendous reward when you can get in pre-IPO. The flip side of that, though, is there's no guarantee of when the IPO could happen. So if you're an investor who says, okay, I want to invest today in the next 12 to 24 months, I want to have hopefully my capital back plus some profits. No guarantees about that. It may not be 1 or 2 years. It may be 5 years or 3 years or 7 years. There's really no pressure onto the company. It's up to them to decide when and if they're going to be going public. How am I doing with that?
Yeah, I agree with most, if not all, of what you said. There's a lot of different outcomes here. You have companies that may be in that pre-IPO stage. So they're large unicorns or decacorns. They're actively traded in these kind of deals. And from there, a lot of things can happen. Sometimes you see them completely plateau and deals fall to the wayside. You see companies that go from success to success. They raise a lot more funding rounds at escalating higher valuations, or they have this amazing IPO. So you see fantastic growth and success stories. You also see massive failures, companies like FTX, which were in the tens of billions in value and then completely collapsed, or 23andMe, which was really actively traded when I first started in this industry and is now not doing very well either. So as you say, the risk is very real. This is not for every investor, but if you can find the right names, the risk reward profile can be really interesting. And this is really for a type of investor that has a lot of conviction in certain companies and really believes in what they're buying into and the hope for an outsized return. So that's fascinating. Yeah. And to touch on the timeline of IPOs is a really interesting point, because a lot of people do assume, okay, if I invest privately, the way I'm going to get my money here is if that company goes public. But as these markets grow, there's other avenues emerging. For example, what if SpaceX doesn't go public for 10, 15 years from today? Well, what if I don't have to wait for that IPO? What if 5 years from now, I might be able to sell to another private buyer? That's a whole new channel at that point. And so again, it's almost like the theme of this is IPOs are not the end destination that they used to automatically be perceived as in a lot of people's minds.
And Christine, you read my mind, because what you're doing, which is absolutely fascinating, you are creating a market within a market. You're truly a matchmaker, going way back to when matchmaking began, but it's not people now, it's companies. Because to your point, if a company takes 1 year or 10 years or something in between, in some ways it almost doesn't matter, because you're out there. And as an example, maybe I was employee number one in a company. I have all kinds of stock. I want to offload some of that stock to do who knows what, put my kids through school, do something for my parents, do something for myself. You're there. Or maybe now I'm an investor and made some investments through you, but now the company's not public yet and I want to get some liquidity. So I'm going back to you. So you're out there and you're matching up people who have ownership in these companies that aren't public yet, and you're able to help them sell or buy, everything else in between. What's that been like the past, I'm going to say 6 to 8 months, because things have been changing so quickly. So how's that been going for you?
Yeah, I love the analogy of matchmaking. I use that all the time because intuitively we know matchmaking, well, every person's different. Finding a match can be very intricate and very nuanced, and that's exactly how it is in this world. So there's all kinds of different buyers in this market. There's people wanting to put in 50K or 100K. There's people wanting to put in 1 million or 5 million or 10 million. There's individuals, there's funds, there's family offices, all kinds of folks. Some people might be looking for something that has more financial data visibility. Some people might want something that is in AI or space or some other industry. Some investors might be looking more for stability and traction. And some might be really looking for that moonshot return where they really want 10x plus on their investment. So different risk, different growth profiles for everybody. What is in common about my clients is, in general, they're all really dissatisfied with the experience in this market, with the chaos, because especially people that are used to public market investing don't always realize the quirks of private investing. There's no price uniformity. There's no structure uniformity, and it's extremely fragmented. So you want to buy a public stock, you go on your brokerage app, you look it up, it spits out a price, and you can go from there. If you want to buy a private stock, there could be a number of different sellers offering the same company through different structures at different prices. And so it's this scavenger hunt in the market of figuring out where can I get the best combination of structures and prices, also considering my investment size, who can match the size I want to do, and also how reliable are these folks? When the market is so fragmented, it can be very confusing, especially if you're that founder that doesn't have time to do your 10,000 hours to figure out the details here that only come through experience. And the last thing you want to do is invest in a deal that's going to waste your time or, God forbid, not be credible or reputable at all, and something bad happens. So it's a real challenge, and there's a lot of analysis paralysis and confusion and overwhelm to approach a market that's as nuts and as chaotic and fragmented as this. So almost across the board, people want a more reliable, user-friendly, simple way to access these deals. And that's why I try and do a concierge kind of approach where I've been in this market for what feels like forever now. And I can be that concierge to make the process simple and to find people offers, help them negotiate and close these.
And Christina, I'm going to ask somewhat of an unfair question because you would likely say, well, Jeffrey, it really depends on the individual, the investor, their risk appetite. Let me ask it anyways. Typical size of check being written. So Christina, I'm coming to you and yes, I want to invest in some of these companies that I don't have access to. You've done the research and I'm going to trust your judgment and recommendation. Typical size of investment, what are we looking at?
While there is a variety, it's the minimum starts to look like $50,000 to $100,000, depending on the specifics of the deal. So quite a big hurdle, really. It's something that's hard to do with $10,000 or truly much smaller amounts. So investors also have to grapple with these minimums and say, I may not be able to diversify that easily unless you've got $1 million sitting around and you want to put 100K into 10 names, sure. Or obviously, the more capital you're working with, the more able you are to diversify because some of these deals have quite large entry minimums. So that's quite common. And you have to figure out the balance between diversification and concentrated high conviction bets, depending on the minimums and the assets that you're trying to deploy.
And so what I'm hearing you say is there may not necessarily be a typical, but it's not uncommon for 50,000, 100,000 in one particular company. Of course, if someone comes to you and says, hey, I want to write a $1 million check and there's availability, you're going to do that. And so you're in business to be in business and well deserved to do that. In terms of how you're operating from your profit level, is it taking a percentage of the transaction? Is it something along the buy-sell price that's going on? How are you doing that?
I charge an upfront broker commission, which is always clearly disclosed, typically 5%, and it can scale down depending on the size of deal that we're doing. So buyers should expect to pay that 5% commission, and that's how I get paid. And then separately, depending on the deal we're looking at, if there are any additional fees coming from the seller. For example, if maybe your perfect deal is coming in the form of a fund or some vehicle that holds the shares of the company you're after. If you end up going through a fund as your seller, at that point, I'll also help walk you through any fees or quirks involved in the structure you're going into so you understand that up front before you decide yes or no.
And Christine, for someone in Default Nation who now finds himself in a situation where they can write the check, and that wasn't always the case, they're bootstrapping their company, they're getting it to a certain point. This kind of investment, many upsides, is terrific actually when you can get it right. That said, it's not necessarily going to be for everyone out there. So as an investor now, so we're taking off our entrepreneurial hat, our business owner hat, we're putting on an investor's hat. These kinds of investments, who are they for? Who are they not for?
They are for an investor with a high appetite for risk, an investor that has high conviction in certain companies that they believe in, that they believe will produce potentially outsized returns. This is not for someone who needs to be incredibly diversified unless they're working with a huge asset base just because of the minimums per deal. This is not for somebody that is looking for low risk, guaranteed growth or anything like that. These are obviously equity investments. There's not a bond component. You don't typically get dividends. So this is not for people that are looking for an income generating asset. This is geared towards growth, and you're hoping that the actual value per share is going to grow over time. And that'll be your golden result rather than collecting dividends or income or other cash flow along the way.
And Christine, on that note, since these companies aren't publicly traded, and it's not as though I can go to my favorite brokerage or even online and type in the symbol and see what the value is today, how am I finding the value if I invested it today and tomorrow, as an example? I want to see, okay, how am I doing? Or next month or next year, how do I find out what the value is?
So the answer is it's really hard to contextualize pricing if you're doing this on your own. If you're that business owner or that doctor and you maybe see a SpaceX deal and you get a certain quote or a certain number and you think, how do I know if this is any good? How do I know if this offer I'm seeing is at the low end of the market, the high end, right on the money somewhere in the middle? How do I know if this is a premium to the last round or to where other deals have closed? It's very confusing. You see these isolated data points. So there are some data sources and companies popping up that are trying to bring more data transparency in helping investors, but they're still pretty limited. So what you can get in terms of context as just an individual approaching this market is honestly very minimal. And so for a lot of people, it can make sense to work with a broker, especially a broker who specializes in the markets of those few companies you're trying to access, because we do these deals day in and day out. So we can tell you where deals have been closing recently, where buyers and sellers currently are, the number of people active in the market right now, very roughly, of course, meaning, is this a very active market for this company? Is it quite thinly traded? Did the company recently do a funding round? Is this deal at a premium to that funding round? Is it at a discount? All these different ways we can take that isolated data point and make it more contextualized and make you understand what you're actually getting in the context of the market. So the more information and experience and context, really the better, so that you go into a negotiation with that seller armed with the right data points and awareness, and you can be educated really and not just take that first offer out there. Because I think individual investors in particular are the most vulnerable to shady offers or deals that are overpriced or deals that have these egregious fees if they don't have those data points in that context to really understand what they're looking at and how competitive it is for that deal.
So it sounds as though a couple of things. On the one hand, if you're going to be going at this, you need to have some patience. And it good old supply and demand. Depending on where things are, perhaps it'll propel it forward, or perhaps it'll be lower than what it was. But it's having someone like yourself, you're out there, you're creating really your own market. You're bringing the buyers, you're bringing the sellers, you're bringing them all together, making it easy for me, instead of me having to go out there and do it and imagine all the emails. I can't even imagine the phone calls, the emails, the outreaches. Hey, Jeffrey, you have some stock in this company. Would you like to sell some? And you're looking to bring that together. I can only imagine some of the conversations. You can probably write books and books on the stories behind that of making this happen. And so all of that said, Christine, where we sit here today, and of course things are going to change by the time the episode comes out live, but that said, where is this marketplace going in terms of public offerings? And now that we're seeing capital markets finally open back up and we're starting to see IPOs finally get back out there, predictions in terms of what we're going to be looking at?
Yeah, I think a lot of people are saying the IPO market is opening back up. You see some IPOs that so far are looking quite good, like Circle IPO, among others. And so a lot of people are saying we'll see more of these giant tech companies go public. I think that may happen to a certain extent, but I think a lot of that IPO pipeline is going to be cannibalized by the number of companies that pause and delay their IPOs, like we've been talking about. Companies that say, I am literally on the brink of IPO. I could go public. It might even be the right time in the markets where this could be a successful IPO, but I'm still going to stay private because the value add of going public maybe isn't there. So I think you'll see that effect more and more. And as an alternative to IPOs, you'll see more giant companies doing things like massive organized stock buybacks, where these companies might let their shareholders sell in a tender or another company organized program, maybe once a year or something like that. So people that really have that burning need to cash out can do that, but while the company still gets to stay private. And so it's like a compromise where companies can acknowledge the fact that people are there 15 years that might really need to cash out from the shareholder base, and they can satisfy that urge through a company controlled sale process, but delay the IPO further. I think we'll see a lot more of that, and that'll really exacerbate this tension really in this access issue of getting everyday people into these companies before the IPO, which could still be pushed down the road.
And what's interesting about this, the circles that you're traveling in, and on the one hand, okay, AI and investment, that's a very different conversation than what's actually going on in the world of AI. But I would love to ask you, given the circles that you're in, where you sit, who you're speaking with, what are you seeing with AI in terms of where we are today and best guess? I'm not even going to go out years because things are changing by the day. So I would say 3 months from now, 6 months from now, any insights, any predictions of what we should be expecting with AI and where it's going to be taking us?
AI has quickly become one of the most dominant, if not the most dominant industries that we see demand for these private deals. So there's a number of AI companies, OpenAI, Scale AI, Anthropic, really many others that are dominating the attention of a lot of pre-IPO investors. So you also see AI companies popping up very quickly that have become incredibly well funded or well valued very fast. So companies that might only be a year or two old being valued at billions, tens of billions, possibly even larger. And so there's this explosion of value creation. I think some people are incredibly excited about that, and a lot of people want to buy into these potential growth stories. You also have investors saying there's some sort of AI bubble potentially happening here. You have a 6-month-old company that's worth billions of dollars. What the heck are you talking about? Something's got to go wrong here. So when you look at the number of AI companies that are valued at billions or that have exploded really in such a short amount of time, it seems to the skeptic not all of them can succeed. There's going to be some companies that fall to the wayside or some sort of adjustment over time, because can it really be possible that all this trillions and trillions of dollars have really been created in these short timelines? Perhaps yes, perhaps no. And so for sure, there's a lot of excitement about AI, and it'll be interesting to see which companies within the AI universe can actually sustain that momentum and put value behind some of the optimism and investments that people have come in for.
And when it comes to AI, Christine, in terms of your world, finding the buyers, finding the sellers, getting in on these pre-IPO opportunities, has it been playing a role with you? And where do you see that going?
I would say no. Personally, I think one of the biggest challenges of this market is that there's what I, in a kind of a cheeky way, call a proliferation of mediocrity. So a lot of people have realized that this market can be lucrative, that there's interesting deals to be done. And there's a swarm of new platforms, crowdfunding sites, just businesses of all kinds trying to get a piece of this market, which is partly why it's become even more fragmented, even more chaotic. So the quality, I think, has gone down because there's so many people trying to serve investors or be a broker that really lack the experience, lack the years, of work in this industry to be able to deal with those quirks in a more masterful way and help investors navigate through the chaos more seamlessly. So it's more and more common for, that business owner we've been talking about, our quintessential successful business owner. Maybe they've even seen something like SpaceX or one of these private stocks offered somewhere in their email inbox. Maybe they've gotten something at some point, but it probably seems sketchy, or they weren't sure if they could rely upon it. Maybe the person offering it is not a licensed broker with FINRA. And maybe there's some access there, but it doesn't really seem like the right access, the right quality. And so what's really scarce in this industry is that experienced sourcing partner, negotiating partner to actually help people understand these structures and transactions and do that in a more personal, high quality way. You get a lot of less high quality folks trying to get their hand in to the detriment of the actual investors. In terms of AI, my perspective is similar, meaning I think people are trying to build AI and trying to build automations for the pre-IPO trading industry. A lot of what's been built so far is not quite good enough to replace a human expert. And so with all these companies pushing digitized solutions and pushing these platforms for trades, but not necessarily to the highest quality, I think that again just exacerbates the issues in the actual client experience. So when these companies that are trying to digitize, trying to use AI to automate everything, typically it's because they themselves are trying to raise VC funding, grow as a business. They're trying to get VC backers. They're trying to go for hypergrowth. So a lot of my competitors are these large VC-backed platforms that are trying to literally become a $10 billion company in their own right and scale at all costs effectively. And I'm saying that might be great. Having 500,000 users or 400 different companies, that might be great if you're trying to impress the VC looking at your deck. But it's not so great if you're one of those 500,000 users and you just want a reliable person to help you with a big financial decision that you're making. And so I'm saying all these companies are going automated, they're going scale. I'm going to stay a disciplined small business. I'm going to focus on a small list of the companies that are most relevant to most investors. I'm going to have a small list of clients that I know I can serve to a high quality. I'm not raising VC funding. I'm not going for hyper growth. I'm trying to serve my clients, keep the standard high, but at the same time, enable them to leverage my years of experience and my expansive Rolodex so they can get that same quality or even better quality, hopefully, but in a way that's personal and that treats them with respect and care, because I know my clients are my biggest asset in my business, and go a new strategy compared to these large platforms that I think are really missing the point of what these clients are going through and what they really need.
What I love about this in a world that's going automated and AI and all technology, you're saying, hey, not for me. I'm good old bespoke and it's one off at a time and it's not scalable and it's very hands-on, which is always refreshing to hear. Christine, there are so many questions I haven't yet had a chance to ask. And before we go into wrap up mode, let me ask you this. Is there a question I haven't asked that you'd like to put out there, or even a topic, a theme, or a message that we haven't covered yet?
I would just say we've gone into all kinds of the nuances, why this market is so complicated. Yes, it can be a very complicated, intimidating market, but it doesn't have to be. And that's something I feel really passionate about. There's ways to learn how to assess opportunities in the right way to get support by someone like me to help make this really streamlined. So you don't have to be intimidated by the process or the prospect of getting into some of these companies that you might have been tracking for years now. You might have been looking at the idea of SpaceX wanting to get in. And I don't want people to come away with this idea that it's too frustrating. There's no good players. Nothing's reliable. The reliable opportunities and the reliable players are there. You just need a little help sometimes to find them. And I want people to have this hope that there's a more streamlined way to access companies that they can feel so excited about and feel like they're actually participating in potentially the future of our generation or a future of humanity in the case of some of these high-tech deals. There's a way to do that in a way that still honors your needs and is more streamlined for you.
Words for the wise, Deep Wealth Nation. Hope you took that in. That is some terrific insights. And actually, Christina, it's a perfect segue for our wrap up. It's our tradition here on the Deep Wealth Podcast. It's really my privilege and my honor where every guest I ask the same question. It's a fun question. Let me set this up for you. When you think of the movie Back to the Future, you have that magical DeLorean car that will take you, Christine, to any point in time. So imagine now it's tomorrow morning. And Christine, you look outside your window. This is the fun part. Not only is the DeLorean car curbside, the door is open, it's waiting for you to hop on in, which you do. and you're now going to go to any point in your life. Christine, as a young child, a teenager, whatever point in time it would be, Christine, what are you telling your younger self in terms of life lessons or life wisdom? Or, hey, Christine, do this, but don't do that. What would that sound like?
I've always said I have no desire to go back to my early 20s where I was slaving away in the investment bank. So if there is a way to somehow pass on the advice to myself without physically going back to that would be really interesting to me. I'll send a proxy to get in the car and go back and pass this message to myself so I don't have to go back to those days. But I think when you're hyper motivated, you don't always keep that balance with your health and wellness. And there's a real cost to that. And so I think it's definitely possible to still be successful and ambitious, whether it's running your own business or just doing something very challenging, but to still honor what your body needs, what your spirit needs, and keep that respect for the other side of the house, and to look after your health and wellness, whether it's psychological wellness, whether it's making sure you're getting enough sleep, whether you're caring for a chronic condition you may have and not just forsaking it for the long working hours. I think it enables you ultimately to be more successful. And I think we all learn this, especially if we're business owners and we're constantly feeling burnt out. But some of the best things you can do for your success and your longevity is to balance that ambition with self-care. And that's something I've maybe learned the hard way working 120 hours in the investment bank for a long time. But I wish I could say your needs are important. Sometimes you have to slow down to speed up. And I found in running my own business and in doing this kind of work after the fact, sometimes it's the moments where you take a pause and you get some perspective on what you've been grinding away at, that it's those moments that enable you to have the sparks of genius or the idea that changes everything. Sometimes it's actually going to that networking event rather than being holed up at home that leads you to your next investor or your next partner, or just changes the way you think about your business problems. And so sometimes by actually not going so full throttle on our work that we neglect our health and wellness and social life, et cetera, it can actually be the catalyst for the next stage of growth in your business.
Love that. And you are preaching to the choir here at Deep Wealth, because that's our tagline, extracting your deep wealth in business and life. And you're saying completely subscribe to that of, hey, you got to look after your health and wellness first. Slow down so you can speed up, because health is our first wealth. And if we don't have that, what's the rest of it all for? So could not agree with you more. Words to the wise. And Christine, before we wrap up, somebody has a question they want to speak to you. Maybe they even want to write the check to make an investment in one of these stellar companies before they go public. Where would be the best place online to reach you?
Yeah, so send me a DM on LinkedIn at Christine Healey, Healey, if you want a one-on-one session to talk more about this or know exactly what deal you want to come into. Let me know one way or another. You can also go to my website, healeypreipo.com. It's Healey, pre-IPO.com. And you can sign up for my mailing list there if you're the type of person that just wants to learn more, start seeing how I talk about it, or potentially be offered deals depending on your suitability. So you can start one or two channels depending on whether you just want to get a bit of exposure, sign up for my mailing list, or actually just talk to me directly and dive right into a conversation.
And Deep Wealth Nation, it does not get any easier. It's all in the show notes. It's a point and click. It's all there for you. Christine, congratulations. It's official. This is a wrap. And as we love to say here at Deep Wealth, may you continue to thrive and prosper while you remain healthy and safe. Thank you so much.
Thanks so much, Jeffrey.
So there you have it, Deep Wealth Nation. What did you think? So with all that said, and as we wrap it up, I have another question for you. Actually, it's more of a personal favor. Did you find this episode helpful? Have you found other episodes of the Deep Wealth Podcast empowering and a game changer for your journey? And if you said yes, and I really hope you did, I have a small but really meaningful way that you can actually help us out and keep these episodes coming to you. Are you ready for it? The dramatic pause. I'll just wait a moment. Drum roll, please. Subscribe. Please subscribe to the Deep Wealth Podcast on your favorite podcast channel When you subscribe to the Deep Wealth Podcast, you're saving yourself time. Every episode automatically comes to you, and I want you to know that we meticulously craft every one of our episodes to have impactful strategies, stories, expert insights that are designed to help you grow your profits, increase the value of your business, and yes, even optimize your post-exit life and your life right now, whatever you want that to look like. And every time you subscribe and a fellow entrepreneur subscribes, it's a testament to how together, yes, we are changing the social fabric of society. One business owner at a time, one liquidity event at a time. So don't let the momentum stop here. Subscribe now on your favorite podcast channel. You'll never miss an episode. You'll be the first to hear from the top industry leaders, the innovators, the disruptors that are really changing and shaping the business world. And maybe you're commuting, maybe you're at the gym, maybe you're taking a well-deserved break that we spoke all about on this episode. The Deep Wealth Podcast, it's your reliable source for the next big idea that could literally revolutionize your business. So once again, please hit that subscribe button, stay connected, inspired, and ahead of the curve. And again, your next big breakthrough moment, it might just be one episode away. Maybe it was even this episode. So all that said, thank you so much for listening. And remember, your wealth isn't just about the money in the bank. It's about the depth of your journey and the impact that you're creating. So let's continue this journey together. And from the bottom of my heart, thank you so much for listening to this episode. And as we love to say here at Deep Wealth, may you continue to thrive and prosper while you remain healthy and safe. Thank you so much. God bless.